Okay, welcome guys to another training session, nailing the timing of the trade. Now, regardless of whether you're a seasoned trader or just new to trading, this might sort of open your eyes to a sort of few different things, a few different ways to look at various things. So, if I have a look at there's two main aspects for the timing of the trade, right? Obviously, the economic data uh, has got specific timing attached to it, right? That's why the market focuses on that a lot, right? It comes out at a scheduled time. You've got the scheduled releases, you've got the forecast, you've got the numbers, you've got everything you need to sort of rip in. Okay. And that's why the economic calendar or the macro fundamentals are a key driving force of direction and momentum in the market. Now, the other part, which is a little bit more subtle, which, I've covered in the masterclass, but probably haven't really emphasized enough the power of the stochastics. Okay. And really, what I've done in the past is probably train people to use stochastics as a management tool. But you know what? Over the last sort of 6 months, I've been testing I've built basically a new trading, well, I wouldn't say Autobot, but a system that actually does identify the optimum time to get into the trade, right? So this is something really relatively new that I thought I would have a look at because you know what? And a few guys may testify to this, as in have experienced it, right? We can see where the trend is, right? And I've just got Euro up here, and you can see very clearly what's going on. Now, a lot of the times, and for a long time, we've been using Trendline Trader, okay, which draws a trend line adjacent to the current trend line and looks for the optimum level to get in, right? So that's something different, right? Because when we're looking for the optimum level, yeah, you're getting into the right level, but the timing, right? It may not necessarily suit. Okay. So depending on where momentum is at the time of when it gets to that optimum level, we may end up sort of getting into the trade and flushed out before momentum kicks to the downside once again. Right. So a lot of the times, or not a lot of the times, but it isn't uncommon to have a nice trending trade in play here and get kicked out of the trade and be nursing a small loss. And you know what? The trend is back in play and you're wondering what the hell was going on. So, just testing over the last as I said, last 3 to 6 months continuously, and the markets have evolved quite a bit, right? But what we could do now is, and I was really assessing, the validity of using stochastics as our entry tool. Now, I'll go through the various aspects, but there's three major criteria here for the timing of the trade, right? And I do cover this in the courses, but what I want to do is just go through it with you right now. Is okay. You've got your. Let's just focus on. Let me just pop this up a bit and widen it out. Okay, so looking at the sort of key aspects, there's nothing to really change here. We want to be looking at the market the same levels that the rest of the market is looking at. So 80, 20, 80 for our upper level and 20 for the lower level. So above 80 is overbought, below 20 is oversold, right? And there's aspects here that as I said, I've traditionally used this as a management tool, but now I tell you what, after what I've discovered, it is definitely going to be more of an entry tool, and that could reap huge dividends. But you've got to understand the various aspects here, right? There's three different levels to get into the trade, and they have varying levels of risk associated with them. The first one is where like you got the D line and the K line, or percentage D, which is the red line, percentage K, which is the blue line. Now, to me, the percentage K, if you're looking at the percentage D line, it's very aggressive, right? And I'm not even sort of going to go into that because the smarter option is looking at the percentage K line and what it does in relation to the percentage D line. Now, I'm going to drop talking about percentage D and percentage K, but really the blue line is what we're looking on. Now, when that blue line just goes above 80, right, that's your first entry level or opportunity, right, where it is getting into an overbought situation. Okay, then you come back in to looking at number two. That would be where those two lines, the K line, the blue line, crosses over the the D line, right? So usually, and we call it the peak entry, right? The first one's early entry, number one. Peak entry is number two, and then you're looking at prime time is when that percentage K, the blue line, goes back down through that 80 level, right? So you've got some lines here, right? And you've got three different opportunities, and it's the same, right? If I just come back to the downside here, looking at here, that's your first potential entry level that you should consider, and that would be for a trader that has really aggressive risk appetite. Okay, then when these things cross over, the peak, right? Number two and third, and probably the best is the prime time, right? So you've got three different levels here to be looking at the market, as in potential entry levels. Now, as I said, traditionally and in the course, I go through and cover this as a really good way to manage your trade, right? And we sort of, I guess it was probably because of our training and we were so close to the market and the fundamentals that, you know what, we were more inclined to just use it as a management tool as opposed, I mean, we used to look at it as potential entry, but not as the key entry signal, not the sole signal. But I'm saying here, if you're looking to time the trade, then you've got to be considering these three options. Okay, so now there's a couple of extra things that you can do here to, like, it's all well and good, right? To sort of be saying, and this is for a novice trader, right? So for instance, you're looking at a potential entry level, it's getting into an oversold situation. Now, would I be looking to get long at this level? No, right? You need some knowledge of the market, how to trade in general, right? This instrument at the moment, euro is trending down, so I wouldn't be looking to get into the trade. But I tell you what I would be interested in is getting into the trade when it does get into an overbought situation, right? That to me is something I would be considering because quite often, and I've had this discussion with quite a few of you before, you know what, when we see a big shift in the fundamentals, you do see the market drop away very quickly. Then it trades sideways, then it falls, and it takes some time to get close to that optimum entry level, right? And that's like painstaking. Plus, you miss 2/3 of the move. So what I've built here is a system, and you can do this manually yourself, actually, is look for levels where it does get into an overbought situation, right? Once we've identified that the instrument is trending down, you could be looking for levels to get short, right? Instead of just using Trendline Trader to get into the trade at the optimum level, well, let's factor in the optimum timing, right? Nailing the timing of the trade. And what you can do is wait for it to be in an overbought situation. Okay, once again, looking at those three core levels. Level one, as soon as it goes above the level, that would be the early sell. The second would be the peak sell. And the third would be, well, let's get the red pen on there, would be the prime time sell. Okay, now that's as sort of simple as it is. And really, this is where you need to be able to factor in certain things, which is like economic numbers, because if we have an economic number that comes out with that trend or against it, and this is sometimes what we ran into, that is going to create the next bit of momentum. And ideally, you do not want to be getting into a trade. I would be managing the tool around major numbers like CPI and employment numbers in particular, or a central bank release. But outside of that, you can actually, especially on a daily, on a longer term perspective, look for trading opportunities or just put this tool into play and just ride the momentum, right? I was reluctant to call it like a swing trade, but I guess to me, and I've never really understood, the true definition of a swing trader, which is a retail name for people that just have, to me, had massive stop losses, right? And we're trying to ride the wave. I'm like what wave? But I tell you what, I can assimilate to what they were sort of trying to tell me. Even though they weren't using momentum as such, they were using a range of indicators to try and work out the timing. Now, this is the key to actually understanding the timing. If you go and load this chart up with several indicators, right, it's going to become convoluted with, say, sell signals on one of them. You'll have others that I don't have up here having buy signals, etc. Right, and that's going to create issues for you with regards. You'll be questioning, what am I supposed to be doing here? Am I selling or am I buying? The signals are contradictory. But when you are focusing on pure momentum, stochastics is your friend, right? And that's what we're sort of looking for. So that's the sort of key part to it. So nailing the timing of the trade, really focusing on stochastics, and to me, the best opportunity here, right, is the prime time, right? Where it goes from being an overbought situation back down, and from an oversold back into the range, right? So that's where momentum is fully diffused and you can look for opportunities. Of course, if you're sitting in front of the screens, and the aim of this tool and actually nailing the timing of the trade isn't about sitting in front of the screens for endless hours, right? Because you could actually wait here. Let's just look at this little pocket here. You're looking at probably maybe 10 hours. Imagine sitting in front of the screens for 10 hours waiting for this thing to roll over. You're just not going to do it, right? You're going to become so fatigued that you're not going to be able to keep up with what's going on. So that's the sort of key aspect to nailing the trade. Now, and this is, once again, if you combine that with the economic fundamentals, right? And so, for instance, we are coming up to this level here, and at the same time that it is looking like an opportunity where it goes from an overbought situation down, and we have an economic number that comes out that is weak for this particular instrument, then you have got an excellent trade in play, right? You can actually combine the two key aspects here of the opportunity. And of course, at the same time, if I just change that back to, say, yellow, if we had an opportunity here, the data was coming out and it goes against the momentum, well, that would be a situation where you make a judgment call. If it breaks through resistance, you're going to have a fundamental trade in play, but it's not going to work with your stochastics, and that's going to be blown up. So there's the timing of the trade that you need to be conscious about, which is, when are the key economic numbers coming out? If it's a tier 2 number or a tier 3 number, I wouldn't even worry about it, because the key aspect of a trending market, and if you come back and find the traditional technical analysts, right, they don't look at fundamentals at all, because when a currency starts trending, the fundamentals are already trending the same way. That's why it's going down, right? I always used to sort of argue with them and say, well, yeah, but the next number's strong and it goes up. You haven't factored that in, and you're missing out on a whole range of managing the trade and optimizing your performance by capturing, not getting caught on trades where you're short when it goes up based on fundamental moves, right? So there's a number of different things here, but the key aspect of nailing the trade is focusing on your economic calendar, making sure you understand and you know exactly when the key numbers are coming out, right? That are important, right? To specifically, not just to the market, but to the actual central bank, right? And that is something that you need to consider, because when we are looking at those opportunities, what is the implications for the data that comes out on the calendar for the specific central bank? And that's where the timing is very important. That's why you'll be looking very closely at what the central bank is talking about. More often than not, it's inflation, it's employment. These days, they're including like what's happening in the global picture and all this sort of crap. So then you can actually nail the timing associated with this. And then when you are considering that, come back, look at your charts, and try and isolate the timing of the trade in relation to, is it overbought or is it oversold? And what is the trend doing? Right now, we're starting to sort of cook a little bit more with a little bit more magic. Okay. And that's how you can actually time the trade. Now, let me just come back and just run you through a couple of different profiles. So, because I want you to understand the difference between, let me just change the screen over, the difference between the timing of these trades. So if I look at sterling, right, and I've got a set time frame here from June the 25th to the current day. So let's just go today. Okay, and with this is on a daily time frame, right? And this is what I'm sort of talking about on a daily perspective. And this is like trading the daily charts. You don't get caught up in the day-to-day noise of the market. Okay, that's for sure. So, and then you've got some settings here with the timing of this trade, right? If I go back and look through sterling from let me just come into the daily chart here. Okay, so looking from May to the current day, where's that pen going? Okay, so this thing starts trending up. So in that situation, right, and this is the same if you are trading, right? We're always looking for direction and momentum. If the direction is up, I'm looking to get long. I'm looking for opportunities to get long. So I'm only looking to buy. And you know what? There's three different options here to buy. Early buy, peak buy, prime time buy. And that's looking based off stochastics, right? So I would be buying when it's oversold, right? That's the key to it. But let me just show you the impact or the performance of the various instruments based off the early buy, peak buy, and prime time. It'll give you a bit of a focus on, where the real opportunity is. Let me just get this page up. Okay, so just having a look here at the instrument, right? So you can see the stochastics down the bottom, right? And I've got this set on early buy, right? So as soon as those lines go across overbought or oversold, it will trigger a trade, right? So the key aspect here is we are only looking for opportunities down here where it gets in, right? First trade, lost $5,000. The second, you hit the trend. Okay, you pick up 30. The third trade, you pick up 10. And then the last one, you lost $5,000, right? So the overall performance there, $30,000, right? And that's just trading 10 lots on sterling. So some of these opportunities, right, they aren't exact. And that's why we always probably shied away from using stochastics as the lead decision to get into the trade, right? If you can combine that with what's going on in the market, and I would actually say that first losing trade there would have been triggered based on an economic number that came out against the market trend, right? So if you're micromanaging that, then you can actually manage the trade itself. So that's early buy, right? And that's what the outcome is. Now, if I just come back and change the signal, peak buy, I'll change it for sell too, so you can see where the signals are on the sell side. Now, once again, we are only looking for trading opportunities here where the two lines cross over at the peak of stochastics. Okay. But once again, you're only looking for trading opportunities where you get in on the downside here. Now, peak, which you would think would be a better performance than the early buy, a $5,000 loss, you've got into the trend on 30K, you lost five. Now, I've got this tool set up. If it has three losing trades in a row, not in a row, if it has three losing trades, it will close out the tool. Now, if I actually change that to more, it probably would have got into the second big trend, and then you're in the trade. But once again, using the tool on its own with a peak buy, not a great overall performance. Still, I mean, you're up 15K, but it's not by any stretch. You're not going to send the kids to Disneyland with that sort of cash in your pocket. Okay, now last of all, just having a look here at prime time, right? So once again, looking for the opportunities only where we are buyers, but where you get the signal based off when it comes back into play. Okay, you get the first trend, nail the move there, you lose 5. I'd say that's once again on a data release. You get the second trend, that's another 30. And we've got into the last trade there, 2. Okay, so the overall performance there, 57K, right? So generally speaking, right, and I've sort of been testing this for some time, when we are looking for opportunities here, okay, the prime time, you do give up some points here on the actual move, okay? So that when you're timing, what I'm trying to sort of give you a demonstration here of is the timing of these trades, especially prime time pro, as in or prime time, where it's at the where you're not getting in at the level where it's peaked, right? If you were selling there, or you're not getting in at the very low here on the downside, but you are getting in where momentum is with the overall trend and where momentum is shifting in your favor, right? So if you are looking to get into a prime or into a good trading opportunity and you're trying to nail the timing of this, well, this tool will definitely do the job for you. In actual fact, we're sort of just looking at the indicator, getting you guys some access so you can actually put on your chart, and that will visually show you exactly the time where you would be looking to get into the trade. Now, this overall tool itself, Primetime Pro, which we have programmed to auto trade, that's a different kettle of fish. And we'll come back and sort of look at ways of what we're going to do as far as monetizing that. But at this stage, we'll just roll out things in stages. So hopefully you get a bit more of an understanding, right? Just looking at the way that performs, and then you come back to your charts and you think, well, okay, so what am I looking at here? Well, as I said, if you go back through the masterclass, you'll find this section on stochastics, and I am going to do an extra sort of like little sub course on the entry signals using stochastics. Okay. Now I've tested this using hourly charts and daily charts. If you go in to use this on your hourly charts and combine it with as I said, like a trader would, right? You look for the key numbers, whether it's the Fed or another central bank, and you've got a CPI number comes out against the overall trend that could shift the sentiment of the central bank, right? If that could potentially change that, then you've got a shift in sentiment. Your actual performance increases, right? Because you have got 2 factors working towards nailing the timing of the trade. The fundamentals combined with the power of the momentum, okay, now you're really rocking with, well, I was going to say rocking with gold, but cooking with gas, right? That's the combination that you really need. And the funny thing is, if there's no fundamentals, well, then this data just sits there and the markets do what they do based off momentum. And that's the best thing. We don't have to watch the market. The market will take care of itself. And we've got our momentum gauge to really determine that. All right. So plenty to consider, right? As we go into the markets, and we're sort of quite often, sitting here wondering, what are we doing here? Are we looking to get long or short? Okay, whether it's on a short-term perspective or a long-term perspective, sometimes you don't know. But I can tell you what, we can now harness the market, and whether the market is just operating more efficiently on a momentum basis, we can take advantage of that and nail the timing of the trades, right? This is going to add an extra layer of probability to your overall performance. Now, any questions there, guys? Hopefully that makes a little bit of sense.
Hey, Brad.
Yeah, Lee.
Hey, Lee. Hey, have you tested this on the hourly charts, or are you looking at it more of a daily chart?
No, I've tested it on all of them actually, on or basically the hourly and the daily. So, like I was looking at the performance of sterling and euro on the hourly versus the like a daily move over the same time frame. So sterling from the 8th of, and this is like you're looking at pockets of time frame here, right? So let me just come back and change the screen of it so I can explain it to you. The like where and we're looking at the markets, right, quite often, and you can see like these short-term downtrends in long-term uptrends. So if I was looking at, say, from here where it started in the downtrend and take it to like here, you're managing all the little like week to week sort of performance as far as the trend goes. Now, if I just did it on the daily charts, the performance was like 41,000 US on the just on the dailies. Now, if I broke up that time frame into components and looked at the key numbers week to week without changing anything else, just doing the same micromanaging the trend according to momentum, the performance was 54,000, right? So you're picking up an extra, what, 13,000 bucks by managing the performance of momentum on the hourlies versus the dailies.
Gotcha.
The good thing about the dailies is, I mean, of course, I mean, I'm looking at this as like, I can't wait to go on holidays, right? And just set this sucker up. All we need is, if we get trending markets, we've got direction on our side. And then what we're trying to do is jump in where momentum kicks in, whether that's an economic number, right? And if you're on holidays, you're not looking at your screens, but you can actually come back and manage the performance based off, okay, like really. And I was thinking of this for some time. I'm not going to sit in front of the screens. Well, I just can't because I've just been doing it for so long, for 10 hours, waiting for the optimum trade to kick in with regards, okay, have I got a prime time buy now? You're waiting, you could be waiting all day. So that's the key part to it, hourly and daily. And the good part is, man, I've got basic set default parameters for this tool. But you can actually come back and optimize this, right? And whether you are looking at, let me just change the screen back over here. You can actually come in and tweak obviously your lot sizes. You can actually change the maximum losing trades. You can change your stop loss and take profit. Like the whole aim, especially on the daily charts, is you can actually set a 500 point take profit, to be honest, because what's going to be your exit is your trailing stop, right? And if you trail the market by 75 points, that's more than enough to stay in most trends. Okay. And so you can actually tweak those. I've also got an auto trade function here to actually buy and sell, right? You could actually buy and sell across the board. That's a little bit more, to me, it's a little bit more speculative.
That's a little risky.
Yeah, 100%, right? You're like, I've tested that and it has been, the outcomes have been random. But if you do set the trend, you can actually set it to auto trade, buy, and basically the same thing as trade, but it will continue to just, if you set it to auto trade and you were out of the market for 6 months, you could come back, and if the trend was still going up, that's all you had to check, then this thing would trigger buy orders based off the direction, right? And what you set. So anyway, I'll be building a whole, like a small suite of videos to explain, primarily first and foremost, using stochastics as the lead entry signal, right? But making sure you understand that, the parameters here, and this is going to make sense to you guys, you got a bigger initial stop loss, right? Because unlike technical levels, we've got exact levels that the market focuses on. With stochastics, right, momentum, it's a basic, this is the general idea. We're getting low here, right? That's why prime time's better, but you need a bigger stop loss to avoid, because there's no exact number where the level would stop. Unlike if we've got trend lines, if you've got trend lines in play here, this is the key aspect, and what I would be sort of talking to basically as part of the program. This is by no means taking over. Well, I'm sure some people will use it as their primary trade tool, but if you combine direction with trend lines and then with the stochastics, you can finesse that. You don't need to have a big stop loss to start with, and you can actually get into the trade. And I tell you what, when that lines up, you'll have three key things in play. You've got a larger trade size in play, right? Because you've got now every aspect working aggressively for you. And if anything, I've probably just left that behind a bit. I always make sure if I'm looking to get long that I'm not getting long when it's overbought. But you know what? Let's use it a bit more aggressively. And everything I've done and tested, I haven't cherry picked the time frames. I haven't gone through and say, well, here's a little microcosm that'll work. No. All I'm doing is looking at where the short-term trend is or the long-term trend and just applying the tool, and the results speak for themselves, right? So this is, to me, I'm hugely excited about just running with this, right? Because the times that I'm not looking at the key numbers and looking for where that trend is going, I could have this as a supplementary trade tool that's generating income week in, week out. And I tested it over 2 months. You're picking up pretty much one full winning trade every week. 7.5 grand, 6.5 grand, 7.5, 7.5. Then it lost 2 grand. That's 1, 2, 3, 4, 5 months. And you're looking at, 30 grand just by having the tool on outside of the time that you're probably trading yourself, right? This is a game changer for sure.
Yeah, super exciting.
Oh, man.
Sorry, Brad.
Yeah, Ben.
Just I just want to do it manually. In the beginning, the parameter values, is it 1433?
I've got it set to 1033.
1033. Okay.
Yeah, there's a couple of things there, right? And just on and like the hardest part, well, actually, this is the next part of it, right? If I'm on the daily chart, I also include a moving average, right? So if I go up here, trend, right? On an hourly chart, I'd make it 70. On a daily chart, 200. If it's above that line, I was trying to attach the whole tool to the trend line. If it's above that, I'd call it the bull bear line for the daily chart, then it's a buy. I would be buying, right? So looking at the trend, you'll be able to identify the trend anyway. But for traders who don't know, that's something they can use to actually define if it's going up or down. So to me, on a long-term chart, if it's above that line, it's going up. If it's below, I'll be looking to sell. But you know what? You want to clearly define trend. This thing just works like a dream on a trend because you know what? Even in the pre-trade routine, first thing you want to do is find a direction. If you've got direction, then we just need to gauge momentum. And now we're talking about nailing the trade, not only with the level and the economic numbers, which is probably what we've done in the past, but now including this sucker here as the same importance as the numbers and the technical levels. I can tell you what, you're going to be able to really redefine your approach to this because if this was oversold like that and we had numbers come out which were good, I'd be buying because this is going to go up and we can actually, you're getting in at a better level. Okay, so that's just check that out. I mean, it's going to be. I'll tell you what, for a lot of traders who, are time poor, which is generally most of us, this is going to be quite revolutionary. All right, guys. Well, I'll get this video up. As I said, I've got to make a few videos, get a few things tuned up, and then then we'll work out what we're going to do with it. Any other questions there, chaps?
No, sounds good. Thanks, Brad.
All right, guys. If you're like me, you'll be frothing, waiting for this to come out. All right, guys. We'll catch you soon. And those trading accounts for you guys will be out today. All right. That's what I'm being
Brad.
told. Anyway, fingers crossed. That's
Thanks,
it.
Brad.
There, see you guys. Cheers.